Hi, everybody. Sean McCracken, news editor for Hotel News Now, here with Jesper Palmqvist from STR. And Jesper, you are the head Asia guy for us. So I'm going to ask you to dissect all things Asia because that's very attainable and easy goal, not at all overwhelming.
That's
Um,
right.
Jesper, we've had a week or so to look at the latest monthly data. What are the big macro trends across Asia Pacific that you're seeing?
Well, in terms of performance, thanks, Sean. It's definitely a continuation into what I keep calling a normal year. And
Hmm.
normal is boring, but boring can be fun kind of deal because
Yeah,
we've waited a
we're all
long
ready
time.
for a little boring.
We
Yes.
we definitely, and I think, and at a macro level, that's definitely every month sees rate growth slowing down. Fortunately, not just in revenue, but also on the cost basis. So GLP margins are holding up reasonably well so far in terms of that enforced productivity. So that's kind of good. Continues in from Q4 into this quarter as we close it. So it's another step towards normality. Now,
Hmm.
there are definitely markets that are a step behind or some that are a slight step ahead of that. But
Hmm.
we're seeing that the last 5% of demand and occupancy are starting slow to get back. But I think that's a bit slower than the rate movements because
Yeah.
there's so many markets that are dependent on the flights, right?
Hmm.
And we're now in the middle of that seasonality for many markets where peak may be ending, say in resort markets, and we're waiting on flight schedules for the next 6 months ahead to really come to life.
Hmm. It's interesting to me as somebody based in America and goes to American investment conferences. It seems like exclusively the discussion about Asia Pacific here is around airlift and the cost of airlift to
Mm.
Asian Pacific countries. Like, is that a big
It's a
issue?
huge thing, yeah. And I notice that as well when I see the difference in conversations. Flights has been at the top of our conversations for quite some time, um, and the main reason is just it is the largest continent, right? In terms of where people
Hmm.
need to go. Well, it's two buckets. One, you have a lot of countries that are hyper dependent on airlift. Singapore,
Yeah.
case in point, but all the resorts across Thailand, Southeast Asia, Australia, it's far
Hmm.
away. New Zealand, you need a flight to get
Yeah.
there, unless it's 1827 and you take a boat.
Yes.
But
I'm not
so
swimming to New Zealand. Yes.
yeah, so it's, I mean, flights are super important for that growth in tourism that was happening. Asia Pacific was the fastest growing. If you look 5 years ago, WTTC and all that, right? All that data, it needs flights to really succeed. And because the growth stalled, we did. Now it's true that domestic flights did well. So that means
Hmm.
markets like Indonesia, for instance, they're okay because they were able to get those narrow body, short haul flights up to speed, um, to a better degree.
Hmm.
So some of those more domestic markets in Australia as well, are like, in the last month, Australia sold more rooms than it did in the same month in 2019, and Sydney
Hmm.
was doing really well again. So, but that's just based on so much still on the domestic. So flights matter because you need the domestic, but the long haul flights still people are suffering from it. I just got back today
Hmm.
from Vietnam, and Vietnam is a great example of a market that was so, I don't know what the American example would be, but it's a market that was, sitting still for a long time and being developed, and like every brand want to get in there, right? In the last
Hmm.
5 years, every
Yeah.
beach and every resort, and then COVID shut it down. And then in the last 2 years coming out of it, there's been an anti-grafting and like a lot of politics impacting the growth as well.
Hmm.
And now they're ready to really get going again.
Yeah.
Uh, it's many. I mean, there's so many stories around this. India is always steaming ahead, doing really well. Started off this year as well, and we saw that now in February and March, doing really well. So there are some strong big markets, including mainland China. China's
Yeah.
doing really well.
It's to jump back to India for a second. It seems like there's a lot of discussion that maybe this is finally the moment that the international brands can penetrate Asia in a meaningful way. Do you think that
Mm.
that's true, or is that just hopefulness?
Well, I think there's definitely more of an opportunity in the past, and there's a couple of pieces of that. One is, of course, the regulatory framework. I mean, I remember 10 years ago was still we kind of joked on stage, is it 72 permits just to get through the door now?
Hmm.
But it has improved. There's been a lot of regulatory change. And at the same time, people didn't know you needed the local partnering it in there, and you only had like one brand who foreign brand who was big there and still has the biggest share of international brands there, like Radisson.
Hmm.
Definitely seeing quick growth across the other North American big brands. They are
Hmm.
adding properties in a really big market. So even if you add 50 hotels, that's, it's a drop in the ocean. The
Yeah.
same way. That's when you do that comparison to China and the successful JVs that, Hilton, Accor, and that everyone has with local and big
Hmm.
Chinese domestic groups. They do either in a known brand or a new brand. It's adding 200, 500, or 1,000 hotels.
Yeah.
That's when you see an impact on it. So I think India has definitely more potential for that to happen. It's easier for people to come in and do business in there. Uh,
Hmm.
and it's about looking at the right markets for it, of course, because right now we're on the up, right?
Yeah. And to your point about China comparing it to India, it seems like the international brands had success there kind of moving downstream a little bit. Is that going to, you think that's the same strategy that you'd probably have to employ for, scaled growth in India?
Yeah, it has to be broad, right? And I mean, what was the one similarity, and it's hard sometimes to find those similarities between China and India, and it's so different apart from being big, but it's
Yeah.
also two markets that don't have many decades of mature hospitality industry in
Hmm.
terms of what we offer. And China was missing, obviously, built economy brands up from 20, 25 years ago and had a luxury coming in. But just like in the West, the upper mid scale, the select service, 150, 180 keys, less F&B, that's growing very quickly. A good modern brand, apart from the lifestyle and boutique, but that upper mid scale is just really something. It was a gap in
Hmm.
second, third, fourth, five tier cities. So that's something
Hmm.
that you either upgrade economy or you hit the right brand, be that
Yeah.
Hampton Inn or whatever, right?
Yeah. That
So I think
sweet
that's
spot.
that.
Yeah.
Yeah, it is, and I think that's the same in India for sure. There's a big opportunity for that to come in as well for the the new generation of with the purchasing power of middle class, upper middle class.
So you mentioned China. Let's jump back to that for a minute. I want to, once again, just like the last time we had this conversation, acknowledge that kind of the American Western view on China is right now that, maybe things aren't as great as they had been in the past, and that, things are maybe a little more insular there than they had been in the past. And once again, you're saying things are great in China. So where's the disconnect there?
Yeah, that I think. Well, one of the things where you can see why, if we start with what is China doing right now, and that's a great comparison to India. And I say that from personal experience because I'm supposed to be in India next week for
Hmm.
a big conference, and I've now struggled for 2 weeks to get a very simple visa organized.
Hmm.
What China has done on the flip side is, of course, open up. So you have a number of big European countries. Like if you have a French passport, you don't need a visa to go to China. This is all
Yeah.
brand new. Now, they've
Yeah.
obviously been reciprocated by Southeast Asian nations as well. So Singapore, Malaysia, and Thailand, you don't need a visa either direction, which opens for Chinese outbound and those people going in. So they're being quite aggressive in opening up and making sure foreigners come in, and there's no rush for Chinese to travel out because
Yeah.
China has never, like I think I said last night, it's never been a better place to tourist in China than now. Right?
Yeah.
It is cleaner, more modern, and great, and everyone's loving it. And the only, I mean, of course, China country, massive, and the Greater Bay Area. So from Hong Kong and inside to Shenzhen and Guangzhou and the GBA, that's where things are still behind 2019, but
Yeah.
not, by huge measures that we're talking like some other markets.
Hmm.
It's still struggling a little bit because of how that the fundamentals of that market, but all the other leisure markets, the tier two and the say like Chongqing, the again the Detroit of car manufacturing of China, these markets are doing really well. They have similar patterns to in the past, if not even better. And the business
Hmm.
mixes. We're missing a bit of the grand big events, but it's like
Yeah.
we said, like if you read the media, it's the backdrop of large residential real estate companies and borrowing that are under fire, which is all
Yeah.
true, but it's not impacting
Hmm.
travel and tourism in that sense still. And
Yeah.
and we're coming up on some great holidays, right? We had Spring Festival in February, right? The what's it called? The Lunar New Year, Chinese New Year,
Hmm.
and big new holidays coming up, May Day, which the Labor Day holidays and things. So that will spurn large domestic travel, but also start seeing some bigger numbers of outbound
Yeah.
as well.
Which is what the Americans listening to this are really hoping and waiting
For
for.
sure.
Especially,
But then you like, and then the thing is, America is not the number one country right now with China to
it is not.
do a visa reciprocal like that. You don't
Yeah.
really see that happening at the moment.
Yeah.
So it's even if Chinese want to go to America, it's not easy,
Yeah. Yeah.
and it's
I think
expensive because of the US dollar.
absolutely. So about Hong Kong specifically,
Mm.
do you think that that market has kind of has the luster come off of it? I know it was historically like the Asian Pacific business hub. And now where you're at in Singapore might be stealing that shine a little bit. Do you think that that's a long-term trend or a short-term trend, or am I totally off base?
No, no. I mean, you're not off base because it's a huge topic that is discussed so often, right? And when I was in Hong Kong just a couple of weeks ago, for the first time in a while, I ask everyone, right? You're trying to gauge the mood, and has the mood changed? I mean, you ask 100 people, maybe you get 100 different answers, but I tell you one thing, it's a little bit cleaner, and you can,
Yeah.
and that's kind
Well,
of in a good way and a bad way because people love Hong Kong for its grit and stuff. It's still a very strong and successful business city. Uh, but anyone who looks at the value at Hang Seng on the stock exchange uh, clearly can see that's not the same as it used to be, right?
yeah.
Chinese companies are struggling to get listed there, and they're supposed to list it there, but it's harder now with permits, etc. So in terms of financial value as the financial hub, absolutely it's taken a dent. And when you look forward, it's hard not to make those kind of cynical views, what's going to happen. But in terms of a hotel market, the biggest issue Hong Kong has right now is the fact that its population leaves Hong Kong for Shenzhen, go across the border for
Hmm.
shopping and F&B.
Yeah.
So it means retail and F&B is really struggling. You can find a table in your favorite restaurant now in Hong Kong without booking, and that was never the case because
Yeah.
people had no across. It's a 14-minute train, and one of the best
Hmm.
trains I've ever ridden to go over to Shenzhen. Super
Hmm.
easy and nice and quick. Hong Kong has finally gotten to the same rates they had before pandemic, and that
Hmm.
just happened in the last few months. But obviously, when all other markets are like 20% ahead, it means that they're still behind if you
Yeah.
compare it.
Yeah.
But we're not seeing much. I think there's one like the Kimpton's opening on Kowloon. There's not many new hotels opening, so they don't have the supply crunch to factor in. But I think Hong Kong
Hmm.
as a city is it's still attractive. It still has people based there, of course, in
Yeah.
financial markets and investment and that kind of stuff. But it is different, no doubt, no doubt.
Now, is
Problem
it
is,
oh, go ahead.
yeah, I was just gonna say it's easy to become romantic about it because Hong Kong is one of the best cities in the world,
Yeah.
right?
Yeah.
It's just everybody loves Hong Kong, and if you don't, you're wrong because it's a great city. it's it's subjectively and objectively a great city.
Hmm.
But I think Hong Kong Tourism Board has a lot of work to do to
Hmm.
figure out the best way to get more people to visit it for sure. But obviously, then you need
Hmm.
the flights and everything else to change.
Is it an oversimplification to think or say, what Hong Kong loses, Singapore gains? Is it
Yeah,
obviously it
it's a
can't
little
be a
bit.
one to one?
Yeah, and I think that's where your Financial Times, etc., is oversimplifies it because everyone will have a story. Oh yeah, this company they moved their people. Of course, we saw movement there, but they moved to many different places. So people who
Yeah.
leave Hong Kong, I mean, depends on how long were they there. I mean, we know what has happened in Singapore in the pandemic was a lot of Chinese wealth coming into family offices, right? Who's then
Hmm.
invested elsewhere. So to say that it's a complete one-way traffic down from Hong Kong to Singapore, of course it gains overall from that, but I think it's oversimplifying it, to be honest.
Hmm. So, before our call, you mentioned that you've been on the road quite a bit, and that there
Mm.
might be something behind that. So, tell us what you've been up to, Jesper.
It's been, I mean, the event schedule. I thought 23 was going to be, oh, that was the peak of all events in the industry, and I'm talking not
Yeah,
just hospitality, but real estate as such. But it seems this is another year where everyone wants an event to happen. So I've been in
yeah.
Japan, Singapore, Philippines, China, Thailand, Vietnam, just and India next week, just in the last month or so. And
Hmm.
a couple of things that stand out for me is we talk a lot about new investors coming into the hotel sector, which is
Hmm.
interesting because when transactions volumes were obviously low last year, and to be better than 23 is not hard, but the
Hmm.
appetite seems high in those who already own. But I mean, even last week, I met two separate companies that traditionally only in office and retail and had bought their first hotel in Q1.
Yeah,
We're getting into the sector and they're liking it, obviously because of office and retail not performing as well. I think we'll see more of that in this year.
yeah.
It's very interesting. The other thing is it creates a different competitive landscape. I think people are not really sure how to look at that.
Hmm.
And outside that, of course, more niche industrial, the data centers is booming, right? Everyone wants to
Yeah,
build a data center, for sure.
yeah.
I don't know what the equivalent of the Sun Belt is here, but there's there's a lot of it here. I mean, both in Japan and in Thailand and many places.
Yeah.
But the competitive landscape is interesting because you have like, and this is something about China a little bit because not only do you have new investors coming in and some transactions will happen, more brands than ever before, and they're going to keep pushing brands out. And I also think the big Chinese companies that in the past tried a little bit to put their brands outside, so the reverse of what we said earlier, I think that has a potential to really kick off. All right. So
Yeah.
H World, Huazhu, and Jinjiang, even if they already own other assets outside, of course,
Hmm.
by owning Radisson or Deutsche Hospitality, to purposefully do the opposite and set up their brands starting normally in Southeast Asia, I think that has an interesting dynamic competitive potential. Um,
Yeah.
and especially if you combine it with reverse JVs potentially, and then throw in the surge of white label, which
Hmm.
everyone is talking about here, new companies forming, people looking for professional management companies that offers owners something like just a different menu, uh,
Hmm.
a more upgraded kind of menu. So I think there's a lot of talk about that at the moment because normally when news cycle goes down, people talk about geopolitics, but
Hmm.
the I suppose the good thing about geopolitics, it doesn't affect our industry unless it really affects, and then
Yeah. Yes. It does or it doesn't. It's very binary. Yeah.
it's very binary. I agree. And recession, like, yeah, there's no recession in 23. Is there a recession this year? Well, last night, well, on Friday on stock market, it was like the rally keeps going.
Hmm.
Even if we're waiting on the interest rate hikes, but people spend more time here talking about on my trips. It's the financing, so the cost of debt for sure, but also the cost of construction, which is so high.
Yeah.
Um, and in markets where they do want to get in, like Japan, or the cost of construction is crazy, and the
Hmm.
labor construction as well, right? So it's that's the kind of the part that isn't normal, all right? So
Hmm.
if
Yeah.
performance are looking a little bit normal, what's less normal is the factors that influence it at the moment, I think.
Yeah.
But there is a sense of optimism after this first quarter. I gotta say, there's enough markets. I mean, we forecast on key markets to go 2-3% growth in occupancy and 2-3% in ADR. I could have said that in 2016 or something, right?
Hmm.
So, but that's against the balance sheet of high rate, high cost, office retail slumping. There are so many other factors that are not the same as 10 years ago.
Yeah. So you said probably about 15 really interesting things that I could follow up on here.
Yeah.
But the one thing I'll key in
Pick
on
one.
is I mean, talking about the flight from sector to sector, and obviously we're seeing a bit of that there with,
Mm.
office being so far down, compared to historical numbers. But I do wonder, is there more opportunity for investors to kind of reuse assets for hospitality in different Asian markets? Or is there also going to be the phenomenon where you have broad real estate investors who have looked at the sector before and look at the numbers now and say, okay, this is really interesting. And then they make an investment here or there, and then they see how much more work it is, like, and deciding, like, maybe this isn't for me. Like, do you think either of those are reasonable phenomenons to expect?
Yeah, I think you probably under the microscope you'll see both of those things happen because it depends on where you head in, and I could see people moving in without being opportunistic, going into say safe markets and investment that way. But it is obviously there's so much appetite for investment now that
Yeah,
it's quite competitive.
yeah,
Like which is also why a lot of people think, I think we'll see some deals this year. At
hmm,
first we were thinking, are we ripe for new big M&A as well, like we saw the other day on, was it Amex, GBT, and then CWT and stuff? Are we going to see things like that back in the hotel sphere? No, I think it's more about changing of portfolios.
yeah,
For so long, it was about the asset light. We have a few groups that continue being asset heavy, but everyone
yeah,
else is trying to shuffle to find their right business mix. And if they're a
hmm,
predominant hotel owner, there's still stuff to do and shift that around so that the
hmm,
pie is big enough to shuffle it. And then you add in the new guys who are ready either the frontier players who want to go a new market that will be okay in 10 years from now.
yeah,
So I think it's such a big mix because in Southeast
hmm,
Asia, still a lot of people who are willing to go, right, let me try that market and
yeah,
second tier market for resorts because long term is going to work.
yeah,
Um,
yeah, for sure.
because again, family money, right?
Hmm.
So much is run by that, and it's so different in terms of the financial pressure than what you saw in Europe or the US, right?
Yeah. So anything we haven't talked about that you think is really pressing or interesting for this month?
Well, the only thing I'll add is probably that um, on most of these, I'm happy. Well, I'd say this: I'm happy that sustainability and how people look, because in Europe, obviously, that's way more developed than in Asia as a whole. Every
Hmm.
event that I go to, sustainability has more of a forefront, and
Hmm.
that's one thing. But the conversation is more mature, and when people look to invest, absolutely, even if it's a very small share of green loans that actually are happening, but people
Yeah.
are, you know, being enforced to it or whatever. But it is an important thing, and people are talking more about benchmarking and looking at sustainability and investment and operations and hotels. So I like that. And even
Hmm.
if they also, on the second point, they talk about, AI and AI influencing, like where are all the great applications that make everyone so more productive?
Yeah.
I'm not seeing that many. I see a few things, but feels
I
like this is
mean,
another
there's
year.
content stuff
Yeah,
so far. Yeah.
it feels like this is another year where we continue the conversation, which is
Yeah.
fine. Everyone
Hmm.
needs to learn, but it's not the year where the entire industry is upheaved by AI. I mean, this is
Yeah.
that hype. And the last thing I'd say is I wouldn't recommend anyone to get dengue, which I'm recovering from
Yeah.
again. It's not pleasant. So if you
I was
stay
gonna
away from
say
that
we should
mosquito,
close. I was just saying we should close on your PSA. So
yeah.
tell us the what and the why and give us what we need to know about dengue.
What do you need to know about dengue? Oh, it's bad, man. You know, well, people know about malaria, and I suppose dengue is the ugly cousin. You get it from a mosquito, and it knocks you out. There's
Hmm.
no cure. You just high fever, and you got to get out of it.
Hmm.
And I did clearly, unless I am an AI robot talking to you from the afterlife.
I
But
will
no.
say, Jesper, you have seemed very well, like full of vim and vigor today. So you've successfully defeated dengue, at
Uh,
least this time around.
Yeah, that was, and it was my second time around on that pony. So yeah, I
All right.
appreciate that,
Well,
Sean. Thank you.
I really appreciate you taking the time. This has been fantastic.
Great. Thank you so much, Sean. See you next time.
Hi, I'm Isaac Colazo, Vice President of Analytics at STR. Hi, and I'm Jan Freitag, National Director for Hospitality Analytics for the CoStar Group. Tune in to our new show, Tell Me More, a hospitality data podcast.
It's a podcast on the global hotel industry, its current trends, what we're thinking about, and where the industry's going.
And we like to have fun with the data too. Find us on hotelnewsnow.com or wherever you listen to podcasts. Subscribe today.
Thank you for listening. This episode of the Hotel News Now podcast network was recorded on March 27th, 2024 by Sean McCracken and edited by Robert McCune. Visit hotelnewsnow.com for the latest industry news.